None other than Jim Rogers, chairman at Rogers Holding, commodity guru, joins in to talk more about how commodities are panned out, or rather looking right now for 2011. Jim, hi, thanks for joining in. A very happy new year to you from all of us here at ET Now.
I am delighted to be here with ET Now, Aisha. Nice to see you.
Great. Let's start off with the questions then. Jim, in our last interaction, you said, or rather you told me specifically, eat rice with silver chopsticks. Are you still bullish on rice and silver?
Well, I hope you did it, Aisha. I hope you went and bought some rice, and I hope you went and bought some silver. They've both gone up since then. Well, I still own my silver chopsticks, and I still own my silver. I'm not sure I would buy it today. It's gone up so much, so fast, but I'm not selling. And if it goes down, I will buy more silver. Likewise with rice. If rice goes down, I'll buy more rice. Both have a great future for the next few years.
Right, Jim, now oil demand, that's been increasing at almost twice the pace of what supply is bringing in, and that's been spurring a number of forecasters to predict that the second highest price on record will be seen in 2011. Would you agree with that?
Wait, the second highest price of what in 2011?
The second highest price that the market has ever seen is what is likely to be seen in 2011, is what a number of people predict.
Well, I think we were possibly going to see some of the highest prices we've ever seen in many commodities in 2011. I'm not very good at market timing, and I certainly cannot tell you which ones and when. You should watch ET Now if you want to get market predictions of who's going to be the best and when. You have people on every day who can answer those kind of questions. But I'm still very optimistic about all real assets, commodities. Governments will continue to print money. We have shortages developing of everything, and that's going to continue.
Jim, let's talk about sugar, because there is a big disparity between Indian sugar prices and NY bought contracts. Do you see Indian sugar prices now tracking the New York values in the short to medium term, or vice versa?
Well, I know that there's shortages of sugar developing in the world. You know, sometimes Indian markets are a little bit distorted because your politicians have a peculiar view of how the world should work. There are shortages developing. Sugar prices are going to continue to go higher over the next several years. Which one leads? I don't know. It really doesn't matter to me. I happen to own international sugar, you know, sugar outside of India, but the shortages are developing. So whichever sugar you own, you're going to make money over the next few years. Maybe not today, because it just made new highs, new 30 or 40-year highs. But don't sell your sugar.
Right now, Jim, again, on the fact that real interest rates are still in negative territory in most countries, and a number of central banks having no exit strategy, do you believe gold and silver are actually going to gain much further in that context?
Central banks around the world scare me. I mean, they're all doing, not all, but many of them are doing foolish things, and we're going to have serious problems down the road. I don't know how they plan to get out of what they're doing. You know, the Central Bank in America has spent huge amounts of money. I don't know how they're going to get out of this problem without causing serious problems for everybody. I think I lost my connection. Hello, are you there?
Yep. Jim, go ahead.
ET Now?
Yes, I can hear you, Jim. Can you hear me clearly?
I said the wrong thing.
Okay, I think we've lost the connection over there. We'll try and patch back, but yes, silver and rice is something that Jim Rogers is still bullish on, though he is amazed by the price of appreciation, or rather the pace of appreciation that he has seen in silver, but he continues to maintain a hold when it comes to rice, silver as well as sugar. He is still optimistic when it comes to the commodity space. We will try and patch back that link and chat a little bit more about where he sees commodities panning out in 2011. Quick trading check then on what is happening right now with our equity markets. Like I said, it's a trading firm, but it has its bouts of choppiness. So 6150 was just about tested. 6160 thereabouts is where the Nifty is currently tottering in. Better traction when it comes to the broader market universe. You have the entire aviation pack, which is looking good. A hike in ATF fuel prices. which may actually lead to airliners actually passing it on to consumers. So that is auguring well for the entire pack right now. You've got JSW Steel, Apollo Tyres is looking strong, JP Associates, Indian Hotels, and then of course the entire textile pack as well is holding up pretty well. So names like Arvind, Escomars, all these stock prices are looking good. Okay, can we go back to Jim? Jim, hi, can you hear me?
Yes, I do hear you. I do hear you, Aisha. I was just saying that I don't see how central banks, many central banks, are going to exit from the mistakes that they've made without causing even more damage. All of these guys, especially the Americans and the Brits who've been printing money and buying absurd assets, are going to cause many more problems in the end than they're solving.
Jim, what about rare earth metals?
Within that context, I know you asked about...
like titanium, tantalum, uranium, etc. in context of China, which produces, 97% of global supply of rare earth metal, which is now cutting production. What's your outlook for rare earth metals?
Well, China does produce 97% of rare earths. Uranium is not a rare earth, but they do produce a lot of uranium as well. Listen, the future of rare earths is great. What's happening is the prices are going through the roof, as you know, because the Chinese do control the supply, but it's pure, simple capitalist economics. Now a lot of other people are opening mines because they can make a lot of money, and governments are behind the companies opening new mines, so it's all going to bring a new supply, and eventually the price of rare earths will come down again. But in the meantime, until the new mines can come on stream, somebody's going to make a lot of money. Not me, I don't own any, but somebody's going to make a lot of money.
Right. What would your view on soft commodities be? Do you expect that they will outperform base and precious metals in 2011?
Well, as a generalization, yes. I'd rather own agriculture and other commodities in 2011, but silver may outperform lots of things. Silver is a metal and it's still depressed. Silver is still still 40% below its all-time high. So silver has not been in any sort of great bubble compared to perhaps some other assets we know. No, I as a class, between agriculture, energy, and metals, I had rather own agriculture.
Jim, what's the fate
and by the way,
US
of the
dollar?
precious metals, I'd rather own silver than gold.
Sure, go ahead.
That's a very good question. I own the U.S. dollar at the moment because there have been many, many, many skeptics on the U.S. dollar. I expect it to rally for a while. I don't know whether I will own it for a week or a month or a year. I just don't know. I do know that as long as there are many, many skeptics, there's a good chance that it will rally. There's some things going on in the U.S. which may cause the rally to go even further. I'm not selling my dollars. If it goes down some more, I might even buy more U.S. dollars. But longer term, the U.S. dollar is in terrible, terrible shape. It's a very flawed currency. I don't plan to own the U.S. dollar 5, 10 years from now at all. And maybe sooner,
Jim, 2010 saw record inflows when it came to emerging markets, especially Indian equities. Do you think prospects now would remain bright for 2011 as well, now that the developed markets are picking up, the likes of U.S.?
Well, I don't own shares in many places anymore, including emerging markets. Most emerging markets got terribly overexploited. I have sold short an ETF, which invests in emerging markets, as a matter of fact. My way to participate with what's going on is to own commodities, because if the world economy gets better, commodities will do very well because of the shortages. If the world economy does not get better, I still want to own commodities because governments are going to print more money. It's the wrong thing to do, printing money, but that's all they know. So whenever they print money, it's good for real assets. So either way, I'd rather own commodities than shares, because I do not know what's going to happen to the world economy, and I do know many emerging markets have been very, very overexploited.
Right, Jim, if you could just go back to your previous comment on the US dollar. You did say that for the time being it seems like a good currency to hold, but in the future you don't see yourself holding US dollars. What do you believe the currency to hold in a few years from now would be?
Well, the only currency on the horizon that I see that will replace the U.S. dollar is the renminbi. Now, it's an absurd statement. The renminbi is a blocked currency right now. But that's the only currency that I see where I know I will make some money. I own other currencies. I own the Singapore dollar, the Japanese yen. I own I own the euro. But I'm skeptical of the U.S. dollar. I do not own the pound sterling. I see no future for the pound sterling. And the only thing I see that can replace the dollar is the renminbi down the road. But maybe, you know, if governments continue to debase paper money, we may all wind up just owning real assets. We may all have to eat rice with silver chopsticks for a long time.
Right. But Jim, just going back to your comment on the renminbi, you seem very optimistic that Chinese authorities will actually let the currency go against other currencies. And would that be the reason you're saying that renminbi would be the currency to hold?
Yes, I own the renminbi again, and they do, for the past 5 years, they've been opening it up more and more. In fact, just this weekend, they opened it up a little bit more. They're constantly making it more and more convertible. I think the Chinese are making a mistake. If I were the Chinese, I would make it totally convertible this afternoon. I wouldn't wait any longer, but I'm not Chinese, so they don't have to do what I say. But they are opening it up, and as it opens more and more, it will be a very attractive investment, and it might someday be an international currency.
Jim, you've been a great contrarian investor as well, you know, right from commodity stocks in 2002, airline stocks in 2003, 2004. What would be your big contrarian bet for the year 2011 and beyond?
Well, I guess I don't like to think in those terms, but I will tell you what I'm doing. I'm selling short United States government bonds, the long bonds. Everybody seems to be optimistic. I even started shorting them when Mr. Bernanke said he was going to buy them. I thought I was being foolish, but I am making a little bit of money right now. But as I look around the world, that's one of the few bubbles or potential bubbles that I see where one should go the other way, where there's a market. There may be a bubble in Chinese urban real estate. There's not really many ways for me to play that. But the only bubble that I see in public markets is the long-term government bond market in the United States.
Right, Jim, and how would you play commodity currencies like the Australian dollar and the Canadian dollar in 2011?
Well, I own both of those currencies, and I would rather own both those currencies than the U.S. dollar longer term. Buy them. If you don't own Canadian dollars or Australian dollars, I would urge you to learn something about them, because in my view, both of those currencies will continue to far, far, far outperform the U.S. dollar and many other currencies, which are not the pound sterling, for instance. They're both more or less sound economies with more or less sound governments, and commodities will continue to do well, and so those currencies should do better than most currencies.